Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, we're here back on YouTube. Sorry it's been a quiet week this week, guys. I normally get 2 videos out a week as I've been trying to do, but this week has been absolutely insanely manic, and I've had to prioritise giving a Bitcoin update to my patrons, which I put out on the Discord and on the Patreon, and I'm just trying to stay on top of things. It's been a bit nuts. Hopefully next week will be better. But gold and silver we're going to look at today, so essentially 2 videos rolled into one. And we're going to start here on gold. Now we're not going to beat around the bush, we're just going to get straight into the Elliott wave action, and then we'll talk about some classical analysis and some alternate count ideas afterwards. So the way I have my primary count is that we bottomed at super cycle wave degree November 2015, almost 10 years ago, and we have since been in cycle wave 1 of super cycle 3, and this will top out as and when in the not too distant future. Don't ask me what that means. We're just going to keep counting the count until it stops, okay, and then we're going to consider whether or not that wave 1 is in, right? But after it's in, I'm expecting a significant retracement between 50 and 61.8% of the entire move up. That would be perfectly normal to head for the golden zone and to look for long-term support as we do it, and I can see a pretty obvious level of where that support would be. Now, anyway, let's come down to the smaller time frame then, and let's progress where we are. So we finished primary wave 4 after a 2.5 year correction that began in July 2020, and it finished in November 2022, and since then we've been in primary 5. And so far within primary 5, I have wave 1 and wave 2 complete, and we are now progressing within the wave 3. Okay, now we've come to the 1618 target for a wave 3 in log scale, but if we measure the exact length of wave 1 and wave 2 projected in linear, which is the actual measurement in dollar terms, we can see that we're through the 1618. It's a very strong wave 3. We're not quite at the 2618 yet, but this could well be the target. Now I don't know for certain that it is. We may have topped already. We've done more than enough to complete a wave 3, but I would argue that since the low on the wave 1 and the wave 2, we have not seen a correction equivocal to this wave 2 anywhere up here, right? We'd be expecting to see another drawn out correction, and that would be our wave 4 and then our wave 5, and that's essentially what I'm expecting. So we're in the intermediate wave 3. It might be done today, it might not be, it might be a few months to go yet. Then we will get a wave 4, which will come back into prior wave 4 territory most typically, and then we will push higher in the 5th wave, which will also complete another 5th wave at primary degree, which will complete a cycle wave 1 within super cycle wave 3, and then a biblical correction will occur. And it will be an excellent opportunity for long-term accumulation of gold if that's your bag, baby. It's not everybody's, I know. I was asked just the other day on YouTube when somebody says, why do you want to hold gold? What's the point? Is it because of some kind of apocalypse fantasy or something? No, it's not. Gold would be no use to you or me in the apocalypse. If the mushroom cloud started sprouting tomorrow after a bunch of bright white flashes and low concussive rumbles and everything was to go up in smoke, no one's going to give a shit about your shiny metal coins. Okay, you don't know that, I know that. So let's just answer that question by saying no, that's not the reason why. If you don't understand, I would suggest you go off and do your own research and look into the reasons as to why you might want to hold gold. It's not for me to lecture, but if you do get it and it is your bag and you do understand why, then you will see any long-term pullbacks within the rest of your life as a buying opportunity. Now, on that note, let's come into the smaller time frame, where we can see all the minutiae details of the count. This is where my confidence overall in the validity of any count starts to reduce, because the smaller time frames are notoriously subject to short-term volatility. Ideas dissipate very, very quickly. So let me run you through where we are currently. Let's bring up all of our channels. I know it looks a bit confusing, so we'll look at them one at a time. And we'll do a labeling while we're here as well, shall we? So we start with the base channel. Base channel here. We've got that one labelled. And this is the first swing high off of the low to the first swing low off of that low to a higher low. And this is our wave 1 and this is our wave 2. And this sets the confines for what could be a 3-wave correction from that prior low within the prior high, if that makes any sense. So 3 waves up, here to here to here. This remains labelled a corrective channel, as so, corrective, until it's breached. Okay, once it's breached, we are likely bullish and moving higher, and we have moved higher, and we breached the channel. What's also very typical, if you let me remove the count for a moment, is a back test of said channel. So we go point to point to point, we breach the channel, and we come back and we test it, in this case several times, and then we move away. At that point we can now establish an Elliott channel. Okay, and we can bring up something like this. Now this at the moment is a projection, because it's making a rather bold assumption that a wave 3 is in here, and we have a wave 1 and a wave 2, and then we have 5 waves in here completing the 3, looking for the 4. Now that is an assumption, and I don't think it's necessarily correct. My shorter term time frame count doesn't have it, but all I can do is go low to high until we get another high, in which case I will move the channel up to accommodate the new high, and extend the bottom to accommodate the price action, until eventually we get a wave 4 complete and confirmed, in which case I'll take Elliott's second methodology of placing the Elliott wave channel, which is the wave 2 to the 4 from the 3 to project the 5. We can't do that yet, we can only do 1 and 3 to find the 4 to project the 5. So, and we haven't even got the 3 in yet for certain, so it just stays there until it has to move, okay? But it confirms that we've broken the base channel and we are indeed in an impulsive move higher. But it gets better. So we have another channel inside of that channel, right? And this is another 5-wave move. This is a smaller wave degree which is currently underway. So let's turn off the base channel of the larger one, and let's bring back up the primary count, and you can see how we've progressed. 1 into 2, 1 into 2, 3 into 4, and now we're going up into the 5th minor wave of the 3rd intermediate wave, right? If we zoom in, we can see how this current channel is progressing. This is at minuet wave degree, and if we were to apply the same logic again, we could project the base channel off of the first 2 lows here, and we can see that once again we broke the base channel. Here's the wave 1, here's the wave 2, here's the wave 1, here's the wave 2, here's the wave 1, here's the wave 2, and then we breached the channel, having come back to the top of it. That's the first 3-wave move. Then we back test the channel, then we move away from it, then we back test the channel, then we move away from it. And this is the next impulsive move higher within that wave 3. We then come into the wave 4, which I temporarily projected as having bottomed. How do we don't know it, but we suspect, because we've gone 1 into 2, 3 into 4, 3 into 4, which has come back into wave 4 price territory at 1 lower wave degree. This is very typical behaviour. If we then take a Fibonacci extension, Fibonacci retracement tool, we place it along from the bottom of the wave 2 to the top of the wave 3, and we select our wave 4 retrace, we can see that we've fallen right between 23.6 and 38.2. This is the high probability wave 4 destination, and that's exactly where we bottomed. Now, at the moment, and that's all I can say, at the moment, that's what it looks like has occurred. It looks like we've come back in a wave 4 as a zigzag, a sharp correction, and now we will progress 1, 2, 3, 4, 5 higher within the minuet wave 5 of minute wave 3 of minute wave 4 of minor 5 of intermediate 3, la-di-da-di-da. Right, so there you go, hunky-dory. That's where I think we are in time and space at the moment. Now, if we were to break down violently from here, we have an invalidation point all the way down at 2483 spot 45. This is minute wave 1 invalidation point. Technically we'd be looking for minuet wave 1 invalidation point for the wave 4, but by that point the wave 4 would have grown so deep it would look absolutely ridiculous. It would look absolutely ridiculous at minute degree as well. So it's a hard cut-off point, but we would have given up hope long before then. So if we fall significantly below the wave 4 retracement, so we go through the 23.6, 38.2, we go through the 50, this is very much not looking like a wave 4 at this degree anymore, and we need to reconsider. The first thing we would do is bring the minute wave 3 down to here and the minute 4 to here, and then we would remeasure everything via minute degree. If things become more extreme, then we will suggest the wave 5 top is in at minor degree and the intermediate 3 is complete, and now a larger wave 4 is correcting. We can't make any of these assumptions yet, and we can't adjust the count accordingly until we see that happen. At the moment, we are in an upward trend of a high, a low, a higher high, well, this was a lower high, but a higher low, a higher high, higher low, higher high, higher low, higher high, higher low. So until we break this upward trend, we don't suspect anything's changed. So we don't start screaming end of the world until we have further evidence. So what we're going to do is we're going to put in a pivot minor, and we're going to suggest that this is a point to watch because this breaks the upward trend of higher highs and higher lows on this smaller time frame. 2605.05. Like so. We'll move this down to here. We'll throw all this into... No, we don't want to throw it into there. This one's this one. That's a new base channel. We might as well add it. I'll put that into the primary count channels folder. Wonderful things channels are. And then we'll take the price and the horizontal label. We'll put that in the primary count. So that's the primary count. So I know it's been a lot of noise and probably very confusing, so let's recap. We've just completed another wave 4 and are going to move higher. If for whatever reason we swing lower and we go through 2605.05, we have broken the upward trend of higher highs and higher lows. We have made a deeper retracement for a wave 4, but it's still legal. We can start to have less confidence in it at that point. If we see a significant sell-off, this is likely wrong, and we have to consider the probability of a higher wave completion around the wave 3 targets at intermediate degree. So we'd have to rejig all of this to bring the 3 in. Okay, but I don't think we're there yet. We continue to progress higher. So that's the short-term count. So now let's zoom out and have a think about the long-term counts and long-term implications. So let's come out to the weekly time frame here. Going to go back into log to make things a bit simpler. So let's talk about what we're doing on the longer term time frame. What does all that noise mean on the longer term? So we've gone from the low of November 2015, which is where I began the primary count. We have 1, 2, 3, 4. We're in the primary wave 5 of cycle wave 1. Okay. At the intermediate degree, we are 1, 2, working on 3, which could be in. I'm suggesting it's going to go a bit higher. We'll then get a 4, and then we'll get a 5. And that will be intermediate degree complete. And then we'll get our much larger cycle wave correction. So over the longer term, let's look at long-term support. Where do I think this wave 2, when it's done, this could be a lot of months away yet, could be even a year or two away yet, but when it arrives, where likely are we going to retrace? Well, let's first things first. Let's come all the way back to where it began. If I can just get that low. And let's just randomly project. Let's say 3,500. Very, very big. But we can see that if we were, then the golden zone would fall straight into all of this price support. So let's take a fixed range volume profile, run it up to everything we've got so far, and give it a second. And I've got a feeling we're not going to get the fixed range volume profile on the CFD's chart for anything prior to... Yeah, we can't get volume for some reason. No, why is that? So there you go. We can't get volume over the long term. I'm not sure why that is. So you have to, but you can imagine where it would be, right? You can imagine it would be all this noise here is where all of the volume would be, pretty clearly. So we would move that out of the way, and let's just put in an obvious support level. We've got prior all-time highs of the super cycle wave 1 all the way back here. This was back tested 1, 2, 3 several times until it was finally tested for support and we moved away. This is a major support level, and it's a 1929 spot 42 aced it. There we go. And I'm just going to put this in its own folder and say long-term support. Now we don't know what that's going to represent as a retracement. At the moment the 50 overlaps it perfectly. So if we were to have somehow topped already in cycle wave 1, coming back to the 50 would make sense. We can move the golden zone up to it, and that would suggest targets of around $3,300, $3,350 maybe, for the top of the cycle, if we were only going to come back to the 61.8. But there's a possibility of coming back deeper. Okay, we could have a wave 2 retracement. We are in log, so we need to adjust for that fact, so you can see the chart. Here's a golden zone back in this major support level, but the 78.6 could bring us to another support level where we can see prior highs and prior lows, so let's put that in. This is all conjecture, remember guys, this is not a precise science, this is all predictive because we don't have a high in place. Once we've got a high in place, we can look to all of these levels. This is me just trying to get ahead of the 8 ball here, and this is 1547 spot 92, aced it again. Put that in long-term support, so we can see fib levels, we can see price support becoming resistance, becoming support again, and we can see the same here on this price support as well. So there would be 2 long-term targets for the completion of the wave 2 when it comes back to roughly $2,000 or 1,500, and we may be halving or even more of a price by that point. But that would be the big pullback that could come, and that would be the excellent buying opportunity going forward into the next decade or so. That's the long-term count as I see it. That's the short-term count as I see it. So that's gold. So shall we move on and have a... Oh, I'll tell you what, actually, no, before we do that, let's have a look at some classical analysis, actually. Excuse me. We're going to add this to the long-term count. Okay, so why do I suspect that we're in a 3 of a 3 at Grand Supercycle degree? Well, when I come over to the monthly time frame and I look at our momentum indicators, we're hitting levels we have never hit before in the history of this asset. Right, momentum is stupendous, and it just continues to strengthen. This is an extremely, I wouldn't say extremely reliable, but this is an extremely obvious sign, let's say then, that we are in a wave 3. Momentum just keeps going from strength to strength. Righto. So that's one of the reasons why I suspect we're in a larger wave 3. RSI readings are reaching extreme levels. We have seen higher readings in the past, okay, but we are back at monthly extreme levels. If we come back to weekly levels, we need to pick this up a little bit as well. We can see that we haven't been this overbought. Currently reading 86.38 on the RSI. We haven't been this overbought since August 2019. Okay, and the last time before that was August 2011, just after the global financial crisis. So we are pushing things, right? We're pushing huge momentum, and we're pushing big RSI readings. It makes perfect sense that we're pushing up into a 3 of a 3, and that just seems to fit on the longer term time frame. Now, our moving averages, we can see that you've got the 10, the 20, the 60, the 250 exponential moving averages. We are now a long way away from a weekly 250 exponential moving average. This tends to get tested on a larger wave correction. So this I have down in my count as a primary degree 4. This is a primary degree 2. There could be an alternate way of interpreting it, but that's the primary count for a meantime. This was super cycle correction, which came all the way through it on a weekly time frame. On a monthly time frame, we can see that we came through the 60 exponential moving average on the monthly, and on the grand super cycle we came through the 250 on the grand super cycle degree. So massive correction, big ass correction, still big corrections, okay, and another big one to come. And that's essentially how I see things. On the daily time frame, we have broken the 10 and the 20. The 10 is now rolling over towards the 20. As you can see, this is quite typical of the wave 2s we had back here, and we whipsaw through them on the larger wave degree corrections. But we stay above the 60 exponential daily moving average while we're still trending higher, and we are still above that average and trending higher, and both are still pointing up the 250 and the 60. We can see, however, that there was bearish divergence in momentum between the two recent highs, higher highs in price, lower highs on the MACD, and we also saw it on the RSI, lower highs in the RSI while we set higher highs in price. So we had a warning that this was coming, and it fits our count so far. Alright then, let's leave gold behind and let's go and have a look at silver. So here we are on the silver chart, on the SLV we're using as our proxy for the silver market. I just find this chart easier to use, especially using with access to volume profiling, which I don't have with the CFDs market, and I have, yeah, the chart just works better, let's put it like that. Either way, let's bring up our longer term count. So coming off of the low in March 2020, this is where my primary count off of that low begins, and I have a primary wave 1 into a primary wave 2 establishing our base channel. We haven't breached it yet. So unlike gold, which has come off of which made its lows back in 2016, we made our lows in 2020. We've had our first 1 and 2 off of the low which gold had during 2016 to 2018. Okay, we are only just doing that. So if I'm not saying that we aren't doing something different, we could be. It's more obvious here in silver that we could be. But if we're following gold as a move to new all-time highs, we're lagging gold considerably. Long way behind, as the ratio suggests. So from a 1 and a 2 at primary degree, we have a 1 and a 2 at intermediate degree, and now we're progressing with an intermediate 3. Okay, looking for a test of the channel possibly, or a breach of it preferably, and then after that 1 into 2, within that 3 we go 1 and 2 again at minor degree, and then we go 1 and 2 again at minute degree. So we have a bunch of overlapping data suggesting that we're now going to explode higher within a series of 3s which have breached this base channel, and then we'll move away. Now, it's nowhere near as clear or confident a count as the gold count is. This could all be corrective. Like I said, although this is labelled a base channel, it is technically a corrective channel until proven otherwise. Okay, so it's breached and back tested, it's all a corrective wave up. So it's A, B, C. We've started counting bullishly because our longer term analysis of silver and the precious metal markets as a whole suggests that we made a massive bottom here at $10.58 during COVID. So anyway, let's come in with a little bit more detail. So our current invalidation point is 24.25, all the way back at minor wave 2. Since then, we've put in 5 waves up at minuet degree to get another smaller wave degree of minute 1 into minute 2, and from here we will either do a zigzag, so we will extend this wave 2 a little bit lower like this, or we're already done. If we come rocketing out of here to new highs, we can assume that we're already done. If we spend a bit more time correcting, we can come back here. Now what we're going to keep an eye on is the length of the wave 2 at minor degree. Okay, and we're going to take this, we're going to copy this. It's a rough guide because smaller wave degrees can take longer than their parents to correct, believe it or not. They can. They don't. It's not a great sign when they do it, but they can. So we do not really want to take longer than 79 days to get this done. We may be done already. It looks like we could easily do it within 79 days, and that's kind of a time projection. We don't want to see the length of wave 2 at minor degree exceeded too much by the length of time at minute wave 2 degree. We also cannot come back below 24.25. If we do, this is incorrect and it's not 1212 extension. It was far more likely a top, and now we're having a larger correction. So, quick recap. 1-2 at primary degree, 1-2 at intermediate degree, 1-2 at minor degree, 1-2 at minute degree. Cut-off point is 2425. Time cut-off is 79 days. If we break either of those first, we should really consider an alternate count. So let's talk about an alternate count. Put these to, oh, I swear to God, I will get them in there. There we go. And then we will save the chart, and here's the alternate count. The alternate count is that this is primary or intermediate, depending on how you want to look at it. I've labelled it 1 into 2, both. I'm not entirely sure which one I prefer, but we go 1 into 2, and then this time we're looking for not an immediate 1 into 2. This is 1 into 2. Then this is 1, 2, 3, 4, 5. 1 into 2. And this will be the bigger correction now. So what we see here is, let's just make sure we're off of log. Yes, we are. We want these channels to be placed precisely. Right. We've got a base channel, and we've got a breach of our base channel within the wave 3. 4 came back to the median line, 5 finished outside of it. It's very weak. It's really not anything like the performance we've seen in gold. Okay, it came to the 131.8. Now we could say the 138.2 if I wanted to have a look at the wave 3. No, we used the wave 3 extension. We came to that target there, then we retraced significantly, almost back into the wave 1 price territory, but we didn't. This was a deep wave 4 correction, sorry. If we bring that up to here, we can see that we came back to the 50% retracement. This is why my primary count is 1212, a 50% retracement which only just breaches the base channel and comes all that way back to the wave 1 and doesn't alternate with the wave 2 for the wave 4 suggests to me that it's not a wave 3, because it's weak, it doesn't breach the base channel far and it retraces too much. Now it could still legally be so, right, because it hasn't broken any rules. That's what I'm saying. It still went to an extension target. 4 did not come within the price territory of wave 1, and it breached the base channel of the first swing high and swing low for the 1 and the 2. All of that suggests that it could be the 3. It's just a really weak 3. It's a bit suspect. It's not a nice strong 3, which is much more typical. So on that note, this is another wave 1, and we'll get a correction much bigger, much bigger, more akin to something like the one we had back here, but not as long, right? We would like to see it come in significantly shorter than this correction, but you can see that even if we were to start correcting from here within another wave 2, it could take a very long time. Even if we halved it, let's say, we could still take a long time from here out into late next year if we were to be doing this. That would be very disappointing for some people, but it would just be another accumulation opportunity on the long term for silver. So there you go. Primary count suggests 1, 2, 1, 2, 1, 2, and that's why we're only just creeping out of the base channel. Remember what we saw in gold, that's exactly what we do. 1, 2, 1, 2 out of the base channel, 3 extends higher, 3, 4, 3, 4. So we're now looking to move higher, and we've got those targets of 24.25 as an invalidation point for minute wave 2, and we've got that length of time, 79 days, we'd like to complete inside of that. If for whatever reason we collapse out of here and fall lower, it is more likely that we did complete a larger wave 1, and we are now going to spend longer and deeper correcting within a larger wave degree 2, so on and so forth. And that really is the two, well, they're the two bullish counts. Let's have a look at an alternative then. What if that's all wrong and it's actually going to go deeper, much deeper? What if this is all a V wave? Okay, so what we've had is a longer term corrective move which is still underway, which is correcting from the highs all the way back in 2011, by the way. I won't bother going back and boring you with it, but essentially what it means is we're going A to here, B to here, and C to here, and we're just getting a big 3 wave move. And the actual move we're dealing with at the moment is A to here, B to here, C to here. So we're going zigzag, and we're going flat within the zigzag for an ABC. We're getting a new wave B high, and then we're going to come to new lows with the wave C. This is an extremely bearish count. And it could be complete right now. It's possible. I don't think this is the count, guys, if I'm absolutely honest with you, but it could be complete. So we're going to just wrap around a couple of targets. So let's go for our B wave high, which is right in the high probability zone. I won't deny it. It's right where it should be. Okay. If you, I mean, don't tell me. I know some people have a go at me for being always too bullish, but don't tell me I don't accommodate the bears, because I do. So the length of A here projected as a retracement for the B. So the B comes to 123.6 to 138.2 traditionally, and we are falling straight inside that target box, right? The cutoff tends to be 161.8. You can go beyond that, but it's extremely rare. B waves tend to follow the rules very neatly. C waves, however, in expansive flats, I'm going to have to rewrite my own book on that one in the future, I think, because I come across C wave extension targets which are extremely far beyond the norm. And mainly in crypto, admittedly. I don't tend to see it in many other places, but I see it in crypto frequently. So I'm starting to wonder if... I mean, I'm not an authority, I don't get to change the rules, but it is an observation worth making. But anyway, I digress. The extension target now from the A to that projected B, if it's in, would bring us to a 1618 for an expansion target down here at $13.47. Right, can you imagine buying silver down here? I can. I can imagine buying it premium free, or less premium on it. Shiny clinky coins. Anyway, I don't think that's going to happen. I think that's a bit of a wet dream for the bears, myself included. Although I'm bullish because the chart tells me to, and I have no objection to what I own going up in value. I'm always kind of secretly bearish because I hope I live long enough to take advantage of opportunities like this if they occur, you know. And if not, my children can, and their grandchildren, and so on and so forth for the next thousands of years. But either way, that's besides the point. That's the bearish count. A, B, C within a larger A, B, C. But the primary count is 1, 2, 1, 2 going higher. Okay. And we'll leave that there. That's the Elliott wave count. As far as the classical analysis goes, let's have a quick update on the daily time frame, bring up our moving averages. So, what can we see on the daily time frame? That's a higher high in the RSI, was leading higher highs. That's a reset to the low, so we can't really call bullshit there between this high and this high. If we see it on the weekly time frame, we can, but on the daily time frame, we come back to oversold. We continue to trend higher in the OBV. There was no divergence between recent highs on the MACD either. They're roughly the same, if not one slightly higher. No divergence on the RSI either, so this does not look like a bearish high per se. There was very little warning of it. The OBV is starting to roll over a little bit, and the MACD is also rolling over quite bearishly now. We need to keep an eye on that. We've come through the 60 exponential moving average, suggesting this is a slightly larger wave degree correction, but we do have it as another wave 2. This wave 2 came through the 60, this wave 2 came way through the 60, this wave 2 came through the 250, and this wave 2 came way below the 250. So we are progressing as an extension should, but we should get out of here now and get moving. Okay, that's what we'd like to see. Weekly time frame, getting quite a long wick on this candle. We'll see how we finish for the week. If we get a really long wick, that could be quite a bullish sign. Weak volume declining as we correct, suggesting that it is a counter trend move to a bullish move up rather than a bearish move lower. We do see divergence between prior highs on the weekly time frame without resetting the RSI, so that is a bit of a concern. We need to see. It could just be the smaller wave degree stepping up as they move higher, and therefore the volume and the momentum slightly weaker at a smaller wave degree, or it could be something more serious. So we're going to keep that in mind. We've got some bearish divergence between highs here on the weekly time frame, and we're just going to keep this visible only on this interval. I know it's been a long one today, guys. Like I said, I'm trying to give you the value of potentially 2 videos in one, really, because I don't see myself getting another one out now before the weekend. So apologies, but it is what it is. Alright, I don't think there's nothing else to discuss. Let's see what happens. We've got our parameters, our invalidation points, and our primary count. And we'll come back in a few weeks' time, a couple of weeks' time, and we'll see what's happened. Alright guys, thank you very much for joining me. If you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you are a regular viewer of the channel and you haven't subscribed yet, why? Why are you doing this to me? For Pete's sake, just hit the bloody subscribe button. I love you for it. And hit the notification button as well for the same reason. And both of you, and all of you, and everyone, if you are interested in learning more about Elliott Wave, getting access to weekly live streams, exclusive weekly videos, a whole bunch of other educational material, and access to the Discord, then consider joining the Patreon. There's a link in the description box below, but it's totally up to you if you do. And if you're not following me on Twitter yet, please do so. There's a link in the description box below as well. Alright guys, take care of yourselves. I'll be back with you as soon as possible. All the best. Enjoy the weekend ahead. Take care. Bye bye.